Good day, everyone. Before we start, we have a disclosure here, and today is 2:36 p.m., 28th of August, Monday, which Monday is usually very slow. A couple of months ago, we have upgrade the A scalper to a different option where you can scalp the market or you can take swing trading. And on the swing trading, we can use the 244 or 150 ticks, but on the scalping, we only use 150 ticks or 1 minute. Also on the swing trading, you can use the 1 minute, 150 ticks, or the 244 ticks. The things is I want to show today is about the swing trading and management because anybody can come out with a swing trading, but the problem is with the swing trading is the stop loss. And today that's what I would like to cover, the stop loss. A lot of traders, they look at the auto trade, but they don't look at the stop losses. And most of the swing trading, usually, they have stop losses, 50 ticks, 80 ticks, and this is a really little bit thick for a new beginner to use 50 ticks, not knowing what he's doing. This can hurt his account badly. So the idea is not to just coming out with the swing trading, is about how, which the most important in the ace in any kind of auto trading is before the auto trade itself is the management and how you can steer that auto trade and how you can manage the trade and the stop losses. This is the basic before you even start looking at the numbers or the profit. A lot of traders, they fail, they just look at the green and the red and the numbers, but they don't really pay attention to the stop losses because if in auto trade, you want to use as an example an ES on a 10 minutes, or if you see in auto trade on 10 minutes auto trade, then the first question you have to ask is not how much money it makes, is how much is the stop losses is. Because let's say you have two lots on the ES and you have 50 ticks or 80 ticks of stop loss on 10 minutes chart, two bad trades right after the other can bring a lot of potential serious damage to your account. So I notice a lot of traders, they don't pay attention to the management in an auto trade and what is the stop loss. This is number one question. It's not about the performance. Of course, the auto trade has to do performance. Today can make money on the CL and a DAX, and tomorrow can make money on the NASDAQ and a YN. I don't know what will be good for tomorrow. It's not that. Is if we have a bad day or if we have a bad performance today, how much we can afford and how the secret is not to give away a lot in the stop losses because this is what help us survive in the whole day, especially on a bad day. As an example today, I want to show how serious it is. A lot of people waive that and or dismiss that management in the auto trade or not even asking what kind of stop loss you are using on that auto trade because on a $3,000 account or on a $5,000 account, can you afford 50 ticks stop loss? Can you afford 80 ticks stop loss? And it's not unusual on any auto trade. Sometimes you have two bad trades right after the other, and we cannot do anything about it. So today, I don't want to talk about each one of them in details, but I want to show what we have done on the A scalper a couple of months ago, where you have the option for swing trading. If we look at the 6E and what we do, we don't cover one chart. I find it as a sign of weakness. We like to show one time frame and we like to show all the market on the same time frame, not the DAX on a Renko bar and the 6E on a minute. We like to show all the market on one time frame, and let's look at all market all around, and not one instrument on 1 minute and one instrument on rank bar, because is it can get me lost as well. So tomorrow, what should I use? What time frame? So we don't want to do this. So we use one time frame, but I want to show you this is a very good example. If we take the 6E, excuse me, if we take the 6E, we started, look, we started here around today. We started around the first trade, took around 648. We started somewhere around there. And you can see the stop losses is nothing. It's very affordable. And this is part of the game, because sometimes we start the auto trade and we don't know. We cannot predict the future. Could be shock market, and especially for an inexperienced trader, he probably gonna dive in right into the shock market, and that can cause damage. And most of the time they blame any auto trade, and this is not true. It's not everything about the auto trade, but this is the management is one of the. I notice a lot of traders, which 75% they dismiss the gain with the stop losses, because also if you put a physical stop loss, like let's say 3 ticks or 4 ticks, you can risk it on closing on the same bar you enter. And a lot of traders, they don't know how to calculate the bar size, whether you are using a ticks or rank a bar or a range. And that it is really a problem. By setting up your auto trade to 3-4 ticks, and you are using a medium size time frame, you can open a trade on the same bar you are risking on closing it, because the market do not go one direction. And this is very, very, I mean, traders should find a balance in those matters, and it is very important. So if we look, we have just a few ticks away. That's a very affordable. The second trade on the 6E broke even. And this is a typical example. This is going to happen on an ES, on a CL, on the DAX. This is not unusual to see. You start on a really hard time during the day. And then there we go. We followed by one bad trade right there. Then a breaking even. And then we took one big right. And this is what I'm trying to say. It's not everything about the auto trade, but when you are using a high or a medium time frame, this one here is 244. It's not that high, but it's not that low either. It's a kind of medium size. Excuse me. So this is really, in order for us to survive in the market until we catch the train, it is very key element on any auto trade to keep your trade affordable. And now if we see here, we took a very small trade. So we decided that if the system, and this one here does not require any optimization, does not require forward testing, back testing, you cannot do that, because that kind of auto trade require real market data to move and calculate. I don't want to cover a lot of details about that, but this is how it functions. And turn on, turn off. So if the auto trade find there is some kind of play in the direction, it's going to be dismissing that trade and with the minimum losses, and we try to catch the big trend. And that it takes a little time to understand the play with the management, because it is very important. Before you start looking at the numbers and the performance, you need to see how you are able to manage the stop losses and the same time has to be as little as possible. And the same time, we need to get rid of that trade when we think the trend has changed on us. And the same time, we need try to catch the trend. And all three elements has to be working together. And this is a very, very, very sensitive area where a lot of traders dismiss it. Let's look at the ES today. And the same story on the ES, break even, small losses, and then we start taking some trade. And you can see this is very important because any guy can claim can swing trading. But the problem is, what is your stop loss on that swing trading? If we notice here, we had an entry at 43.50 at 7:54 area, somewhere around there, Eastern time. And we exit at 44725. And then the auto trade did not take any trade for almost an hour. And when it decided to take a trade, was not valid. And then it closed on a break even. And then we have a beautiful run one more time. And then we have one break even. We have a loss. And a beautiful run. So what I'm trying to say, and this is one more trade right there, and this is a beautiful run. So what I'm trying to say, no trader can predict sometimes. And no trader can say in half an hour we're going to have a chop market or a sideways. No one. I don't care what kind of instruments. If there are not market movers that cannot, simple as that, nobody can predict the futures. In order for us to survive that area here, it is very important to manage the trade. I want to show another example here, especially on an expensive market today. I want to cover the DAX today. This is another one. Let's cover the CL first. If we notice, we have a very small trace on the CL. That's very fine. And I want you to see that area here. We got in at 46.31 and we exit at 46.31 immediately. From 1 o'clock till 2 o'clock, there is no trade. And this is beautiful. Then we had a short trade and immediately we closed, it closed itself. I'm not the one who's closing it. Closing it, dump it when there is a little suspicious about the trend or start getting. And then the auto trade took one more trade right there. Got in at 46.32 on the CL and exit at 46.55. So on any kind of manual trading or an auto trade, you have to survive till the end of the day until you achieve your target with the minimum losses, and it is very important. By using 20 ticks or 30 ticks or 40 ticks on a swing trading, you would have been stopped long time ago because of a bad decision, or you stayed in the market and two trade after the other that can do substantial losses on your account. And this is a very, very important. I want to show one more example today. This is the DAX. The first trade on the DAX. What is the DAX here? Here is the DAX. We are on one trade right now at 450 on one trade, and now it's 2:50 p.m. We took the first trade. The first trade was 748. This is the beauty, and especially for the DAX, it's a very expensive market. And if you notice, we got in at 51.5 and we exit at 52.5, and then we are still on that trade at 34.5. So the market has not closed that position, which this is really very, very nice to limit your losses. At the same time, when the market is trending, not using a dummy trailing stop, because also dummy trailing stop, let's say when you are taking a trade on the first pullback, as an example, your dummy trailing stop would have knocked you out, and that can make you lose a beautiful trade. As an example, if you were using a trailing stop in this area here, a dummy trailing stop, the auto trade not measuring the trend. So by the time you got to that level here, around 97.10, and on the pullback, you would have got out of that trade and you missed the trade for today. The beauty about it is not just the entry, is to make a decision when to exit out of that trade. So instead of making $100 on that trade, you can follow that trend, and it could be one trade for today or two trades for today, and then it can make you happy. It's much better than to be exposed into the market 24/7, because there is no trader can sit 24/7 and keep making money in this business. So this is really important, folks, to keep your eye on your trailing stop and how to survive the market until we catch the trend, whether you are a manual trader or an auto trader. The exit on that auto trade determined once the trend is over, then the position is closed. As long as the trend going long or short, the position is going to stay open, and the exit is market price. So when the decision is made by the auto trade, it is made to dump that trade at any price. Folks, that's all what we have for today. God bless you all. Be careful with your trading, and see you all another day. Bye for now.